All right, what is going on, everyone? It is what's going on, everyone? My name is Kenneth Beard here with Stock Indices, and welcome back to another video of overall market breakdowns. So, if you're new to this channel, we do these videos every single day, Monday through Friday, and essentially, what these videos are, they are breaking down the overall market. So we're going over economic data reports, and we're looking at the four major indices. What are those four major indices? The S&P 500, the Nasdaq, the Dow Jones, and the Russell 2000. Those are the indexes that I will be watching. So, I'll straight into this video here. If you're new to this channel, subscribe. Like I said, I make these videos every day for you guys to have informative information to make money-making trades. Yes. So today is Tuesday, October 19th, and we don't have much economic data, but we do have some interesting economic data reports. The first thing we have is the building permits. Building permits previously came at 1.72 million. The median forecast was 1.67 million, and the actual was 159 million. So 1.59 million. So we missed on the expected number for the building permits. So that number is dropping as well. We got housing starts. Housing starts previously were at 1.58 million. Was expected to actually go up and go to 1.61 million, but we dropped down to 1.56 million. Not that big of a drop, but with the median forecast being so high and that number being missed by such, by the median forecast being missed, it shows that, the economic forecast are, not up to par for what is actually happening. So we're seeing those housing starts numbers start to slow down, showing us that, the building of American homes, of U.S. homes, are slowing down for whatever reason as of right now, and that may not have the best impact on the market. So that is what we got for building permits and housing starts. We had a couple, speeches today. Not anything that I'd be watching, but Governor Bowen and President Birkin speak on diversity. Atlanta Fair, President Raphael speaks on unemployment. That may be a good one, but that one has already passed. It's 3 o'clock right now as I'm making this video. That speech was supposed to be at 2 p.m., so probably missing out on that one. But at 3 p.m. we had Fed Governor Christopher Waller speaks on the outlook. So, those are some speeches we have. But as far as actual economic data reports, we're missing so far. And yesterday we missed on all of our economic data reports, just about, besides the National Association of Home Builders Index. That was the only one that actually went up. But, we're mostly seeing these decline in economic indicators. You can kind of see the pattern that we've been getting lately. So let's look at these stock charts here. Let's pull up. So taking a look at these ES mini futures here, we can see that the market is continuing to push up. Just the fifth update on the market, the fifth green day. Market's very strong in my opinion as far as technical analysis go. Now volume is not still kicking in. Volume each day has been decreasing, which is my only concern with this uptrend. We had a overhead resistance level that I have marked at 44.75 on the ES mini futures contracts for the S&P 500, and that level easily got taken out today by the buyers, showing us that strength. And we can see that the market is continuing to just rally higher. We're seeing higher highs, we're seeing higher lows, and if you go to the, let's go to the 1 hour here. Let's go to the 4 hour. We'll want a wider span view of this. If we go to the 4 hour, we can see that it's a sharp uptrend, so sharp to the fact that it is not even bouncing off of that 21. It's kind of just a little bit overhead, and it's bouncing over the 20. It's bouncing like, right below the 21, but it's so steep to the point where, you know, it's you know what I'm trying to say is it's very strong. It's a very strong uptrend that we're seeing now. We're in an overbought area on the RSI, so that overbought area could retrace the price a bit. We're not seeing any divergence. The market's just pushing higher into that overbought area. So, you know, with its breaking out recently, let's move my head here. With it recently breaking out, you can see the double top here. You can see this is a clear area of resistance up here, and we broke through it. I'm thinking that we are going to pull back and maybe base here. Once that happens, continue higher. So before I get into any more long positions, I had some puts that I had wrote on the SPX, and I just closed those out yesterday because, well, I'm like, okay, the market is uptrending. I'm up, I'm up some 60% on my puts, 60, 70, 80% I think I was up 80% on my puts at the time because of the uptrend. And so I closed them out. I'm like, okay, anytime now the market is going to pull back. And it may just be a simple pullback like this, to the 20 or whatnot. But we are in that overbought area, so just be cautious as to how you are positioning your long positions right now, because the market could pull back anytime. We don't know when it's happening. I don't know what is going to happen, but the market is not going to have 10 green days. I don't think that's going to happen. So we are seeing some bullishness, and it's good to see, but just always look at the other side and what could potentially go wrong in situations like these. The next one that we're looking at is the VIX here. The VIX, let's go to the daily chart. VIX still going lower. We're at, below 16 at 1579 on the VIX now. So the VIX is showing us some weakness and still selling off. Haven't seen any green yet in the VIX. So I'm expecting, in the next couple of days that the volatility index may pop, maybe go to 18 or something like that. I don't think it's going to stay in these lower levels for that long. It hardly ever does. We get to these lower levels, but then we always get something like that. Get to the lower levels, then we go back up. You know what I'm saying? So the markets always repeat themselves. Always repeat themselves. So sooner or later, this sell-off and volatility is not going to last, and we will see an uptrend, and not an uptrend, but like just a little spike in volatility. Be expecting that, because it's very unlikely that volatility is going to continue to sell past these levels that we're currently at right now. Next one we're going to look at is the Qs, the Nasdaq. Nasdaq also seeing that strength, getting right above that previous resistance level. Looks like the same thing as the S&P 500. Not much to go over there. The DIA. DIA is kind of scrambling up above here, but another green day for the DIA, pushing up higher, and it's looking good for the DIA in that perspective. All of the major all of the major indices pushing higher, making those higher highs, and that's really all I can see now. Like I said, will this uptrend last? It may last up to the resistance area, but I don't think that. I think that once we get to the resistance level, we're going to see some pullback here on the indices. I think that for the S&P 500, if we go back to that, I think that I don't even think we'll get up here I mean, we may get up here. We could push up to the resistance level, and if we do, I don't think it'd be a straight shot. I think that we'll see a pullback, some retracement of some sort, just because there's not enough volume yet supporting these moves. But then again, the market has proved to us that volume is not the leading factor in this uptrend, as it's already broken through several key levels without it. So that's what we're looking at as RUT. Now RUT slowly grinding higher. We had that big hammer candle that pulled down on the market, and now it's kind of going sideways, but edging a little higher, seeing green days. Like I said, RUT is one of those ones that I'm anticipating that's going to have quite a bit of a upside push once it gets out of its range that it's been in for such a long time. And I may actually look to play RUT because, I think the RUT is going to stay above these EMAs or these super moving average. No, EMAs, take that back. I don't have super moving averages. But I think they'll stay above these 50 and 21-day moving averages for the time being. So I may go in there and write some puts below right below the EMAs and try to take over some of that time decay because this thing is a very slow mover, a very small ATR, and it's really just moving sideways. For the longest time, you could have played butterflies on this thing and made money all day, iron condors on this thing and made money all day because this stock really doesn't go anywhere. But yeah, that's RUT. So a trade that I took off today was Google. Google continued to push higher. We had a little bit of a halt here. Google pushed higher, and today continued to push higher alongside the rest of the market. And so, seeing that, I was up about 80%, a good amount, and I decided to just close my puts on it, the puts that I wrote, and take that. I think I closed it for like a 15 debit. I opened it up for like a 102 credit, so I made a decent profit on those, and I never really hold my trades to expiration just because I don't like to kind of risk that last couple of days. It's like, for what? If I'm up 80%, I'm up 70% on my options, I just close them out. It's no purpose of taking the risk to mess up a whole trade when you're already in profit. Take profit, you all. That's the biggest key. Take profits when you're trading. That's how you stay consistent in the long run. Don't get greedy. It's no reason to. So yeah, Google's pushing higher. Close that out. And my assumption, looking at the overall market right now, is that we have seen multiple green days. We've seen multiple up days in the market. Volatility is extremely low, almost at 15. My assumption is that in the next couple of days, the market will see maybe a pop in volatility, maybe and once that pop of volatility happens, I think that the market is going to pull back, and by the looks of it, I don't think that it'd be an extremely bad pull back to the point where it pulls back all the way back down. We're up. Let's see, from these lows down here since we broke out. We're up. Damn near 5%, 4.6% is what we're up as of right now. So the odds of it just continuing to sell off after all this is very unlikely. If that happens, there'll have to be some economic news behind this. Something has to happen, very drastic in the overall market for it to pull back to those lower levels which we just came from. So not really concerned about that. I do though think that there will be a pullback of some sort. This is very annoying. Why can't I just look? Okay. I do think there will be a pullback of some sort though. And so that's what I'll be waiting out on. Once we get that pullback and once the market confirms to us that, it let go some of that steam, then I can reposition myself for more long options. And once it does pull back, once I get a confirmation, what I'd want to see here on the 4 hour for a confirmation of a pullback is I want to see this maybe an engulfing pattern of some sort. I want to see it actually start to pull back and maybe some volume get in there. On the daily chart, maybe we get a close below high or low day, and if we get something like that, I may play some calls on the upside, and and then once a couple of days go past my calls expiring, put some puts in there, write some puts under the market, and then kind of form an iron condor or something like that, and let the calls expire. And then once the market, you got to time those trades right though. Once the market starts to reverse, exit out of those puts. So that's kind of my plan going out with the market conditions right now. Not terrible market conditions, mostly stable market conditions. So nothing to be too concerned about. And just like I said, watch for longs. The market is very strong as of right now, and nothing can stay strong forever. So that's my advice to you all. Nothing in the stock market is going to stay green forever. So get ready for a pullback of some sort, volatility, on a big spike of some sort. And yeah, that's all I got for you guys today. If you enjoyed this video, leave a like, comment, subscribe. I make these videos so you guys can have informative information to make money making trades. If you enjoy these type of videos, click that video up in the right corner and subscribe to the channel. I make these videos every single day, Monday through Friday for you all. I got my heart on time, Monday through Friday. Every single day I'm making these videos just to spread some of the knowledge that I have, show some of the things that I'm thinking about. And so, as a community, we can all come to an agreement. If not come to an agreement, come up with your own trading assumptions, but you may see some things here and there in my videos that you may pick up on and may want to use in your own trading style. So yeah, if you like these type of videos, go ahead, right up there, click it, and I'll see you all in the next one. Peace.